Hey everyone! Big updates from the stock market today. The Dow Jones Industrial Average took a nosedive, plunging 977 points, which is about 2.5%. This comes right after a massive 1,679-point drop on Thursday. We're looking at back-to-back days of significant losses fueled by fears of a global trade war ignited by none other than President Trump. So what's causing all this chaos? China has hit back against U.S. tariffs with their own 34% levy on all American goods, effective April 10th. Investors are really spooked by this move, and it's causing a broad market decline. The S&P 500 is down 2.5%, following a 4.84% drop yesterday. The Nasdaq Composite fell 3% today after a 6% plunge just yesterday. Tech companies with significant exposure to China are getting hammered. Apple is down 5%, Qualcomm 6%, Tesla 5%, Caterpillar 6%, and Nvidia fell around 4%. Bank stocks aren't faring any better. Morgan Stanley dropped 5%, and Goldman Sachs is down 4.5%, with Citigroup and JP Morgan Chase both sliding more than 4%. It's not just the stock market feeling the heat. The 10-year Treasury yield fell below 4% as investors flock to the relative safety of bonds. JP Morgan has even upped the odds of a recession this year to 60%. President Trump, however, is standing his ground. He stated on Truth Social that his policies will never change, and he's urging investors to invest more in the U.S. This trade war is having ripple effects across various sectors. The petrochemical industry is also feeling the pinch. JP Morgan downgraded Dow and LyondellBasell Industries to neutral from overweight, citing the negative impact of these tariffs on their polyethylene exports to China and Europe. The broader market is also showing some worrying signs. The S&P 500 has entered correction territory, now down 12% from its February high. The Russell 2000 has entered a bear market after falling over 6% yesterday. Meanwhile, both the Nasdaq and S&P 500 are on track for their worst week since September 2024. To add to the mixed signals, the March jobs report showed non-farm payrolls increased by 228,000, beating the 140,000 estimate. But the unemployment rate ticked up to 4.2% from 4.1%, against expectations it would hold steady. It's a turbulent time for investors right now. Keep an eye on the market and stay informed. If you found this update helpful, don't forget to like and subscribe for more real-time market news. That's all for now. Take care and stay smart with your investments.